A life settlement is the sale of an existing life insurance policy to institutional investment groups. So we're talking about, prime banks. We're talking about mutual funds, private equity investment groups. These are people with a lot of money that are very sophisticated in what it is that they're looking to do. It's very important to understand and to know who's buying these policies. You don't want it being sold to just some guy down the road. You want to make sure that these are people that are looking to hold on to these policies for long-term gain, not short-term gain. Some people might wonder, well, what's in it for me? Why would I want to sell a life insurance policy? Well, what's in it for our clients is cash. It's cash in hand. It's cash that they could use now for anything that they would like to use it for. Basically, there's two types of insurance. There's term and there's permanent insurance. There's a lot of different variations within those two, sectors, but it really boils down to term and permanent, both of which can be sold in a life settlement. But that's basically what a life settlement is the sale of an existing life insurance policy to institutionalized investment groups. It's very important for somebody to consider a life settlement because it's a living asset. Most people think that a life insurance policy only has a benefit when somebody dies or passes away. And that's completely the wrong way to look at a life insurance policy. It is a living asset. On a term policy, I'll tell you, you got to look and see when the expiration date's going to come. If that policy expires, you're out. You have lost everything. The ink's going to disappear from the paper. If you don't use it, you're going to lose it. So use it. And the way that people use it is by contacting us to get a life settlement and to be able to get them the most amount of money available to them. Same thing applies for a permanent policy. Many times when people get older, the reason that they originally got the insurance, it's not there anymore. Their children are now older, they're successful, thank goodness, and so they don't need to have this large cash policy. And so now, as they get older, the premiums become more and more expensive. They can't afford it. So what are their options? They could let it lapse and they lose everything. They could try to go ahead and maybe surrender the policy. Well, what's going to happen is the insurance companies are going to give them pennies on the dollar, if anything at all. We can get a very good cash offer for their policy, and the average offer is about 22% of the face value. Many times it could be much higher, 50% or higher. So, easy math, if somebody has $1 million policy, that's $220,000 of cash that they would have in their pocket that otherwise, if it expires, it's going to go away. Nobody wants to throw away $220,000. And that's just on average. Again, many times we get much higher, 50% or higher. Well, you know what? Cash it out. Don't worry about it. An investor will buy it, use the money for whatever you want, and you will never have to pay another premium again. So that's the beautiful thing about a life settlement. What a lot of people don't realize is that on term policies, believe it or not, only 3% of all term policies actually really ever turn out where the insurance needs to pay out anything. Now, on permanent policies, only 11% of all permanent policies do the insurance companies ever pay out anything. So that means that 89% of all the money paid into it is pure profit. That turned out to be billions of dollars that the insurance companies are making off the life insurance policies. Instead of having the insurance companies making all the money, let's put cash in your pocket. That's what we do at Paul Ashley & Associates. When investors are looking to place value on a policy, there's a few different things that they're looking for. Number one, they're looking at the face amount of the policy, if there's any cash in the policy, and really what is the life expectancy of the insured. Anybody 65 years or older that has some medical issues, we can get a settlement on. Anybody that's 75 years or older, we could typically do a settlement on, simply because of the age. Now, regardless of age, if anybody has a life expectancy of 20 years or less, then we could usually get a settlement simply because of the life expectancy. Life expectancy is a really interesting science. They can't look at you or I and say, okay, here's how long, we have to live. They can't do that. But what they do is they take, let's say, a batch of 1,000 people or more, and with the same age, the same health, the same lifestyle, they batch those all together and they look to see what is the average life expectancy. It's an absolute science, and it's all done by statistical probabilities. Now, what's really amazing is that when we look on average at all the policies that we've done, typically they were only off by plus or minus 4 months. Now that is an art. One of the biggest mistakes that people make when they're trying to sell their life insurance policy is that they try to navigate through these waters on their own. This is such a complicated business that if people try to do it, they're going to get absolutely taken advantage of. A lot of times, people have no idea what the value of a policy is. They will go to some company that they might hear about, and they take the first settlement offer that is given to them. And many times it's a very, very small offer, but they simply have no idea what their true potential is for the value of that policy and what they could actually receive as a cash settlement. So it's very important that people do not navigate these waters by themselves. They need the assistance of a licensed professional broker, which is what we are. We are very experienced in doing this, and we're going to get the client the most amount of money possible. Our team are highly skilled professionals, and we're licensed to be able to be life settlements broker through the insurance commissioner. Number one, we have no upfront fees. We have no out-of-pocket cost. All the compensation is actually set by the insurance commission. We go to work, we put a lot of time and effort into making sure that we are going to give the best customer service to our clients that's available out there anywhere. The way that Paul Ashley & Associates gets the most amount of money for their clients, for their life settlement, is that we have a very unique process of taking the policies and putting them through an auction. And what we do is we take the 30 largest buyers of these policies and we make them bid it up against each other to see who's going to offer the most amount of money. We know, just with our experience, how much we should get for our client. Typically, it takes usually anywhere between 6 to 12, sometimes even 14 weeks. If they're going to keep on bidding this thing up, we're not going to put a halt on it because we're getting more money for our client. If you don't make them compete, they're not going to pony up the money. We're going to make sure that we get our client the most amount of money. You know, a recent example that I can give you on the value of what we do is we had a client call us that had a policy. It's $1 million policy, and it was a 20-year term policy, which was on its 19th year and 6th month. So in other words, in 6 months, the policy was going to expire. They were going to have nothing. They called me and they told me that they had an offer from one of these big companies that you hear about on TV for $50,000. And they said, "Do you think that your firm can do better?" And I told them, "You know what, we'll certainly try. With the experience that we have, we knew that $50,000 was a lowball offer. We're going to do better." So we went ahead and had them sign our one-page authorization form, and they filled out a basic medical questionnaire. We wrapped this stuff up and we send it out to the different buyers and we let them bid on it. Our first bid that we got out of the gate was for $129,000. Within about the 6-week period, we ended up getting another 35 offers. Long story short, we ended up getting this client $259,000. Now guess who the buyer was? It was the same company that offered that original $50,000 to our client. We ended up getting them 5 times more than what the original bid was. What does that say about those other companies? They're trying to buy these policies for as little as possible. Now, our client was extremely happy, and we were so happy to be able to help out that client. But that is the value in what Paul Ashley & Associates will bring to our clients. Oftentimes people ask me, why would somebody want to buy a term policy? It's going to expire and it's going to lose all its cash value. And it's a great question. The reason for that is because most of the policies are convertible into a permanent policy almost all the way up until the end of the expiration date or until it attained age of the insured. So an investor would buy the policy, convert it, continue to pay on the policy, the premiums, and the insured gets paid cash. They don't have any more financial obligation with this. They could use the money for whatever it is that they want. If you or a family member has a life insurance policy that you're looking to liquidate or you're looking to sell for any reason, could be a term policy that's about to expire, whatever the case may be. You might have an elderly parent that you're trying to find funds to help them out with assisted living. Your life insurance policy is an asset that you could certainly cash out on. I'd love to have a free consultation with you. Call me directly and ask for Paul Ashley at 855-209-7355. All calls are absolutely confidential.